Okay, so let's proceed. Let's proceed. So if you look at that question, it is basically testing you on the vertical analysis or common size, which we did the other day. And then from there, you are required to come with a forecast financial statement or income statement. So if you can recall what we just did last week about the ratios increasing the sales. So when you are doing forecasting, you will be told maybe the sales increased by 10% or 25%. Then from there, the other items that are there in the income statement will be depending on the sales value. And how are they going to depend on the sales value? Using the vertical percentages that you have calculated. So if you look at this income statement given up here, you are told to do the vertical analysis for the income statement of 2020. Once that is done, those ratios are what we are now going to use to come up with the forecast income statement for 2023. So remember, we said for the common size analysis or vertical analysis, we said sales represents 100%. We are looking at the expenses there, the cost of sales, the operating expenses. What percentage of total revenue do they have? And that's why in the income statement, we take sales as 100%. In the statement of financial position, we take total assets as 100%. Everything is done with reference to total assets. So in this particular question, we have been told to do the vertical analysis for the income statement of 2022. So vertical analysis for the common size statement here, we are going to take whatever is here, we divide by the sales. And we've all said that sales will be the reference point. It is our denominator. Sales being the point of reference all through, we will fully log the point of reference. And that's why we're introducing the dollar signs. So for some people, you just dial F4 to introduce the dollar sign, while others, you must use the function key Fn, then together with F4 to be able to introduce the dollar signs. Once that is done, we'll be able to see it displaying 1. So you just autofill. You just autofill to get your percentages. Of course, in Excel, you don't need to multiply by 100. You just come here and insert the percentages, either at 0 decimal place or even 2 decimal places. So are we now together? Are we now together up to this particular point? Are we now together up to that particular point? Okay, that's a good question. So if you look at what we have here, cost of sales, well, the figure which we have here is a negative. So you can adjust it to do away with the negative, but you know very well, whatever you are going to get using the percentage is what you are going to subtract from the sales for you to get gross profit. Operating expenses here, the figures indicated here are in a negative form. And that's why we get the negative percentage. That one clearly implies that when you're going to do your forecasting, the operating expenses, you will get the negative already inserted. So what you need to do is just to get the summation of this and the negative one for you to get the operating profit. So having the negative or not having them will still help you. Will still not be a problem. So explain on horizontal analysis. So let's focus on vertical. Tukimaliza vertical, we get to horizontal. If you mix the two, you will not be able to interpret these things during exams. Let's complete the vertical and then we move to horizontal. Is that clear? Is that clear? Is that clear? Okay, so once that is done, so we are being told, yes, we've seen the percentages here. We've seen the percentages. If we now come down here, we are being told that we come up with a forecast financial income statement for 2023, maintaining the vertical ratios for 2022. We are maintaining the vertical ratios for 2022. Now, the ratios that we have are these ones here. The ratios that we have are these ones here. Let me just transfer them here. So let's do the workings down here. Okay, that's what we have. So we are being told that using the 2-year cumulative revenue growth rate calculated in B2 above, prepare a 1-year forecast of the statement of profit or loss for the year ending 30th June 2023. Assumptions. Number 1, assume that the vertical ratios for the year ended 30th June 2022 apply for 2023 forecast, except that depreciation and finance cost remain constant. Tax is assumed to be 30%. So as we are going to use these percentages here, we have been given disclaimer. Number 1, this depreciation and finance cost will remain constant. We are not going to use the ratios. We are going to pick the actual figures. So even if you do not know anything here, for the depreciation, you should not have any issue because just come here and pick the depreciation value for 2022. For finance cost, you come here and pick the value for 2022. And then tax, we are being told that the tax rate is assumed to be 30%. That is 30% of the profit before. It is 30% of the profit before tax. So even if you do not know anything, at least you have two correct entries here for depreciation and finance cost. So let's get to this point. We have the ratios of the percentages. These ones here, it is 40% of the sales. It is 60% of the sales, 26.04% of the sales. How are we going to get this missing item? That is the sales for 2023. We are being told that the sales for 2023 will be higher than the sales for 2022 by this percentage. So the 2-year cumulative average revenue growth rate for the year ended 30th June 2022 is 22.4745. That percentage is the increase in sales from 2022 to 2023. So it means our new sales value for 2023 will be the value for 2022. We multiply by the percentage increase, which we have said for us to get the new figure, it is 1 plus that increase. And the percentage increase we have been given, this one here. If you close the bracket, you will get the sales value for 2023. Once that is done, remember all these ratios were depending on the sales, and that's why we took sales to be 100%. So it means this one here will be 40% of the actual value of sales in 2023. So we now come here and say, we take the percentage, multiply by the actual value. All these other items are depending on the sales value, and therefore we can fully log the base or the denominator up to this particular point. Of course, that will apply here up to this last part. So you come to a depreciation, which you are just picking directly from here. We come to finance cost, which you are picking directly from here. Then you are told that the tax rate is 30% of the profit before tax. So you now come here and indicate 30%. What they want to see is, have you applied the instruction given to you? Even if the values will be the same at the end of the day, they want to see you applying that 30% of the profit before tax. So we now come here, our gross profit. Of course, if you do that, you are going to have the difference between these two, because you already have a negative. Just get the summation of these two to get the same value. You are now inserting formulas there. You are now inserting formulas there. Sorry for that. Let's have this one here. Okay, then operating profit will be the difference between these two. The difference between the two. Then the last one here. So that is what we have. That is what we have as the net profit for the year 2023. So I believe that is clear. And you can now proceed to other things. Cost of sales. Cost of sales is equal to sales. It is 40% of the sales, and our sales is 99,204. So we simply take 40%, we multiply by the sales. This is the sales value. You have this, and you know very well that the sales value is this. So if you get the difference between these two, you're going to get gross profit, sales minus cost of sales. This is what we have. But because we already have a negative, you simply get the summation of this positive and negative. At the end of it, it will be a difference of the two to get you this particular question. Let's not go to cash flows. We are focusing on the forecasting of financial statement. Wachana na cash flow for now. Tuko sawa? Okay, so I think Daktari is back. You can now proceed.
But I'm not, I can't talk.
Let me make you most.
Allow me to talk.
Yes.
So the guy with an iPhone here wants you to repeat on what you did to get this sales figure. The sales figure, how you got the sales figure, Mondi, are you able to repeat very fast? He took the figure of 2022 and multiplied it with the 1 plus the CAGR. If you're able to see your CAGR, which you told me you had gotten earlier on. So he took the figure of 2022 and amplified it with the growth rate. So it took the, yeah, that one, yes. Times the 2022 figure, 100,000. It 181,000. Yes. That's what it did. So I'm so sure you may not have gotten everything 100%, but at least now you have a clue on what you need to do to be able to predict a 1 year's income statement. At least I hope you can't really get to an exam where they're telling you to predict 1 year income statement, and then you see a lot of darkness. At least you'll be able to get some marks. All right, so can we go to the next concept? They are talking to me. They are not talking to me. Perhaps they're not able to hear me. They are not talking to me at all. Great, great. Horizontal, they're talking of horizontal. I would rather we finish this concept of forecasting to make a candle to be the next day kama kesho again to shika kama ni horizontal na cash flow. Tusimix hizo vitu mbili. Tusimix hizo vitu mbili, yes. Tusimix hizo vitu mbili. Cost of sales maybe iko na shida. Tusimix hizo vitu mbili. Wacha tumalize kwanza. Varying the 2022 figures direct to CAGR will take you to the same solution. I believe so. There are many ways of killing a rat. To me, I'll be really focused on delivering this thing here. I would want to do another forecast question. Spetuka Limited. This Spetuka Limited, where they want us to forecast financials, this statement of P&L for Spetuka Limited from year 2023 to year 2017. That's what they want us to do. So then they want us, number one, to give them an annual revenue growth rate for the years 2020, 2021, and 2022. And then a 3 years CAGR for 2022. Effective tax rate. Effective tax rate. So before we start doing this question, I would request that each one of us tries to get this growth rate for part one. Each one of us tries to get the growth rate for part one. Each one of us tries to get the growth rate for part one. Amos, I would request that you look at the video. If you'll have a problem of looking at this video, then we shall be able to repeat, please. Now we have changed the gear a little bit. Now we are getting, and again, we're going to repeat the same thing here again. If you're just keen with this one, you'll be able to get this concept. So I'm waiting to see whether there is anybody who will be able to give us this annual revenue growth rate for the year 2020, 2021. You know, this is the normal growth rate now. The one of taking tatat divided by tatat, you subtract 1. Margaret wants some assistance there. Is there somebody who can send this question on WhatsApp? It's very important that everybody has this question. So Paul, please give this great lady this question, please, please. Can somebody confirm that the question has been sent on WhatsApp? Check WhatsApp. Check WhatsApp. Spetuka, it's called Spetuka. So according to CK, 20%, 25%, and 18%. Let me see whether there is anybody else who is able to get these figures here that have been given to us by CK. By CK. 20, 25, 18. 2 students already have been able to get that. Confirmed. Big Vic, confirmed. There is a student today who told me that, Mwalimu, you know what? At this KNEC exam, you can use Google. You can use Google and then you copy a few things here and there. And is it possible? Is it possible that you can, especially for the theory questions, you can you can steal something. CPA students are tough. Don't try that at home. That will really give you a lot of anxiety. I wouldn't want to try that. I would rather, it's risky. Yeah, you'd rather just do your thing. You fail. Okay, so everybody is getting number one. Everybody is getting number one. Would you even try it? Don't try. Everybody is getting number one. Mwalimu don't do number one. Don't do number one. Mwalimu number one, all of us are comfortable. Is that the case? Is that the case that Mwalimu number one, all of us are comfortable with number one? It doesn't matter how they bring it. Number one, all of us are 100% comfortable. Thank you so much. Thank you so much. Thank you so, no, there is a no. So Omondi, is it possible that you really, you'll do? Yes. Career juu ya BDA. So in this case here, ladies and gentlemen, watch Omondi afanya sharing. Omondi, is it possible you share, you show them very fast, because I've seen somebody saying, Mwalimu, hey, no, which is very good. You're just getting the annual growth rates, the normal ones. How comes your screen is too tiny? Are you able to zoom it out a bit? Yeah, much better. Much better. Thank you. Great. So for 2020, anachukua hiyo figure ya 2020, he's dividing it with the 2019 figure minus 1. To what year? You convert this to percent. Mayom wants us to skip this question. Mayom wants us to skip this question because CP Omondi did the question. I would want to differ with you, Mayom. Let's repeat these questions. Forecasting must come. Let's repeat them. Because again, remember, they are quite they are quite based on the assumptions you make. Maybe the assumptions that you shall make today are not the assumptions you made on that day. Yeah, so let's continue. Let's continue. Great. So now we go to the second one where they want us to get the CAGRI. So is there somebody who has been able to get the CAGRI now? Is there anybody who has been able to get the CAGRI? CAGRI ya pili. Okay. So CAGRI is 21%. Maybe Omondi, you could do this CAGRI for them very fast. CAGRI, so long as you remember the formula. You take the amount, it is 2022. Yeah. You divide by the oldest. Remember, they are telling you 3 years, but you have to count your 3 years very well. Yeah. Raised to open brackets there. Over 1 divided by 3 years, right? 3 year, 3 year. I like the way Omondi is pointing there. It's 3 years. 3 years. It is 3 years. It is 3 years minus 1 equals. Enter that is. So if you convert that to percentage, you're getting 21 point something. If you do 29, 20.9 something. Thank you so much. Thank you so much. Now from there, we look at the effective rate for the period 2019 to 2022 tax rate. Is there somebody who knows how to get the tax rate? Let me see how they're getting the tax rate. Evelyn already has the tax rate. You'll take the tax paid, go back there, Omondi, and show them where the tax paid is. Income tax, yeah, divided by PBT, yes. Income tax divided by PBT. Income tax divided by PBT. You take the income tax divided by PBT. You can kill that negative, right? Divided by PBT. You can kill the negative as you divide like that by putting a negative before the after equals. After equals. Great. Then he is able to cascade that to the other years. Percent. Great. Do we have those figures ourselves? Do we have the effective yearly rates? The effective yearly rates, the effective yearly rates, the effective yearly rates. So from there now, we go to the assumptions now. So we go to the assumptions. We go to the assumptions. So when we are preparing forecasted statements, there must be assumptions. And these are the ones that we are doing now. There must be assumptions. Those are the ones that we are doing now. Now assume the following for Spetuka Limited. Or the tax part, somebody is saying the tax part has a problem. Repeat on the tax. Please get that tax again, Omondi. Tax, if I were you, I would have written to get tax, you take the tax paid, you divide by PBT. PBT, you divide by PBT. You divide by PBT. Which ratios do you want us to interpret here? Which ratios do you want us to interpret here? Tax divided by tax expense, divide by tax times PBT. Oh, I can see where you are driving from. So you're saying to get the tax expense, you normally take tax rate times PBT. All right. So then to get, in this case here, tax rate, you make it the subject, which will be equal to tax expense divided by PBT. Or the question is calculate and interpret, but interpreting them is not really a hard thing. If revenue is growing, you simply say performance good. Revenue going down, performance not good. Maria has gone to something different. I would want us to concentrate. My plan basically is to show you all of you guys how we are doing what here, how we are forecasting. Once at least you have a glimpse, nice glimpse of how we are doing the forecasting, yeah, then we shall be able to move to something different, like, for example, those ratios you're talking about, we compute them and then we interpret them nicely. From there, we should be able to go to something like, there are many things, like for example, this cash flow. Cash flow is a savior. Cash flow is a savior. Okay, so this cumulative average growth rate is basically your compound rate of interest. It's a compound rate of what here? Rate of interest. It's a compound rate of interest. Now it depends on if it's the revenue which is growing at a higher rate, you say that's very nice for the company. All right. So let us build now these other assumptions from the statements we've been given. So we start with the revenue assumption. What have they told us about the revenue assumption? What have they told us about revenue assumption? So revenue assumption, they have told us something very nice that many students were not able to interpret today. They have told us revenue growth rates are forecast under 3 scenarios. So this is a question of the scenario manager. There are 3 scenarios. And these 3 scenarios we have are best case, base case, and the worst case scenario. So best case is what we call optimistic. Optimistic. You can write it down there, optimistic. Then we have the middle one, which is the base, B-A-S-E, base. And then now we have the worst case, which is what here, pessimistic. So then what have they told us about this revenue when things are very good? Let's read there. Revenue growth rates are forecast under 3 scenarios, namely base case, optimistic case, and a pessimistic case. The base case growth rate for the first year forecast is the 2022 CAGR, is the 2022 CAGR. So you see, they're telling us that the best case for our first year, what is our first year in terms of a prediction? We are predicting from year 20. Actually, if I were you, I would have written Omondi all the years. The years that they want us to predict is 2023 to 2027, 2024, right, like that, up to 2027. So then we come there now to base. They're telling us the base case for the first year of prediction is equal to the CAGR for 2022, which we happen to be having. Yes, that one, pull it down there. Great. You pull it down there. And then now we continue reading before we repeat. We shall repeat. We continue reading. So what are they telling us? This is expected to reduce by 2% annually. Every year, a 2% reduction until the last year of the forecast, subject to a minimum of 15%. Yani uende kwa kile mwaka, ukideduct 2%, ukideduct 2%. So Mondi, could you kindly do that for me? So go there, you say equals, you pick that. 2% is the same as minus 0.02. Or you can put it 2% as Mondi is putting there. That's okay, that's okay. 0.02. Control enter. And then now you can copy that entire thing to the right. Great. Expand that a little bit. I can see things are not okay because you have gone below 15% for those 2 years. So whenever you go below 15%, remember there is a basic minimum being given of 15%. So I'll go to 2026, I put them manually 15%. Yes, subject to that we are reducing this thing, subject to that we can never go below 15%. We can never go below 15%. So then you can go straight away to where we have below 15% and then you put it manually. Please put manually. Don't use if. We are not using those things here. You're using those things here. They are very good. If you're using Excel every other day at your workplace, you can use them. But for me today and moving forward, I would want us to use our mother tongue. So first of all, for the base case, are we together there? I would want to know whether we are together for the base case, how we have gotten those revenue predictions, the assumption. Because we're subtracting 2% every year. Repeat again, Omondi. And Omondi, if you are capable of speaking, please talk. You're a young man. Your voice is much better than mine. Someone would want to hear your voice. I just unmute.
Okay, so just the way we've seen in the other question, the starting point is what matters. You have been given here a starting point of this percentage here. Remember, in a different question or even in your exams that you're expecting next week, you might be told that the starting point is 25% directly, then you are given the reduction rate or even increase rate. So here, instead of just giving you a figure directly, they have told you to refer to what you calculated in Roman 2, which means if you're not able to get the value for Roman 2 correctly, you might end up getting wrong assumptions down here. But since we all know now how to calculate that, this is what you are told to pick and transfer to be the starting figure for the first year under the forecasting years. So for the base, we have been told to pick this cumulative average revenue growth rate that was calculated up here. So one, you can refer to it or just type it there directly. Typing it there or referring to it, both are okay. So you can apply any of the two. Once that is done, you are being told that this is expected to reduce by 2% annually until the last year of the forecast, subject to a minimum of 15. So you are allowed or you are required to reduce this one here, but the lowest amount or the percentage that should be here is 15. So you now take this one here minus, you can indicate 2% directly. You can indicate 2% directly like that, or we all know very well that 2%, if you convert to decimal, will be 0.02. Whoever writes 2% and the other person who writes 0.02, you will all have the same answer. So that's why indicating 2% or 0.02 will have no difference. So once that is done, remember we've set our formula that we take this and then subtract 2% from what we have there. So what we need to do is just to autofill. If still you are not able to do that, you know very well that 20.964% minus 2% will be 18. Just type that 18 there. You will still have your answers correctly marked. And then if you now look at it here, another thing that also matters, if you try to do this to one decimal place, you will be able to see this one here being 15%. But what have they said? They have said that anything below 15% should not be accepted. Your minimum amount should be 15%. So try, in most cases, to give your answers here maybe to 3 decimal places so that you'll be able to detect such kind of things. Like this one here, it is not 15%, but when you reduce it to 1 decimal place, you will see it reflecting 15%. So this 14.96 is less than 15, and therefore we need to insert 15% there. The same to 2027. So I believe that's now clear.
Thank you, Mondi. Great. So then we shall straight away go to the other. You can see like now, if you go to the statement, go to the statement up there, you can see time is not on our side. We wasted a lot of time. I don't know where we wasted it. So we're told here that is fine. So for the optimistic case is 20% above. So if it's 20% above, that means what here? 120% is 120% of the base case. Wanasema, the optimistic case is 20% above the base case. So can we kindly go and apply this 120% to get what here? The base, the optimistic, I mean, go down there to the optimistic, go down there to the optimistic. So what are they telling us? That if you take this base value and you'd want to get the optimistic, simply take 1.2 of this figure. Because it is 20, optimistic is 20% more times that. And the beautiful thing with Excel is that the moment I've been able to get that same figure, I'll be able to paste the other side. I'll be able to autofill the other side. And then you go and tell us something about what here, this pessimistic, which I would want to throw a question to you. So please go up a bit. Then we go read together the pessimistic now. So pessimistic case is 10% below the base case. So could you kindly help me interpret the pessimistic? I mean, could you kindly help me interpret the pessimistic? Could you kindly help me interpret the pessimistic? Could you kindly help me interpret the pessimistic? Could you kindly help me interpret 90%? Will be 90% of the base, yes. Because it's 10% below. It is 10% below, yes. Great. And then you enter there, and then you'll be able to do to the other side. Okay. So great. Great. So somebody is asking, why can't we take the base and then we add 20%? Remember, that is not really the inspiration here. The inspiration, whenever percentages are given, if someone tells you that this thing is 10% more, if someone tells you this thing is 10% more, so it means that that thing, to get this higher metric, you have to take 110% times this particular figure, which was your base. Because I've told you it's 20% over and above. So you can't take 20%, you add to that one. You can't be correct. You can't be correct. Thank you. So I hope you guys have also been able to write in your Excel and reach to where we have reached. I hope you guys have been able to reach wherever we are. And then remember that 15% rule does not apply for pessimistic, does not apply for optimistic. What we realized, many other students who are going to the pessimistic figures, they're telling us that the pessimistic figures also are not supposed to go below 15%. Like they were making adjustments here. The 15% rule is only applicable to the base. Thank you so much. So now we have the revenue assumptions. We shall be able to see what to do for them. Good question. How do we deal with the base case below 15%? Repeat. If we get, for example, a base of 10, then we'll be able to ask ourselves, the floor is 15. So if you get 10, you do away with that 10 and you write 15. Like now, 2026, you can see we had 14 point something. We wrapped that one and we wrote 15 there. We wrapped that one and we wrote 15 manually. The other one, of course, is very small. We wrapped it, 13%. We wrapped it and we had to keep there 15%. I hope that answers your question, Charity. If functions are very nice, but if you are highly experienced in Excel, well done, we would want you to go the if way, the formula way. But I'm telling you, this exam, like the students we were with here last semester who passed, actually, most of them confessed to me that Mwalimu, we did this exam so manually. Where they were talking of cash flow, I was not even remembering anything about it. I just did it very manually, the way I was doing it when I was doing my FR paper. That's what they told me. Then I realized, I mean, why should we bother you with this, some of these things, and we know that it's a manual exam. But of course, if you are able to use like those power functions, some ifs, whatever, if you're able to use them, you are so advanced in Excel, go ahead and use them. But I can assure you, these questions, they will be more of manual. It's Excel, yes, but very manual. And remember how they mark. And it's important that you go even to that exam with your calculator. How they mark, they only mark the entries. Maybe you use your calculator and you put figures there, well and good. To us, it is the end, which will justify the what year, the means. Although when you use a calculator, you know now there are areas you will really be a bit slower. But for us, we don't care. What we want is to have students come next semester. We should be able to graduate. Mapping question, you can't really do it manually. That will really take you ages. But I don't think they can bring a mapping question, these guys. They don't have that capacity to set a question. They'll start setting those kind of questions after 5 years. Yeah, I can see like Kabage must be an experienced user of Excel. The pessimistic part, what we have done, we have taken 90% of the base because they told us it is 10% below. 10% below means 90% of the base. Great. So somebody wants you guys to send him this. 1 minus 10%. You can see Omondi has got many ways of doing this, which is very good. Times that, because it's a reduction. And then now you copy that. You still get the same. Depends on how you would want to interpret. Thank you so much. In the interest of time, can we kindly move forward very fast and we go to the next assumption? So the next item they would want us to create an assumption for, not number 2, is the gross profit margin for the first year of forecast. Is the 3-year average, not cumulative, just 3-year average for the period. So then the first thing you need to do for number 2 is to calculate the gross profit margin. You calculate the gross profit margin. So ladies and gentlemen, how do we get gross profit margin? Is there somebody who can remind us? Just go ahead and write for us. Gross profit margin equals gross profit all over sales. Optimistic Joshua, they told us about 20% more. 20% more is the same as 1.2. So gross profit margin, thank you so much. So could you kindly go ahead and then give us this gross profit margin then for each year? Those are free marks. So Mondi, please give us the gross profit margin. Yeah. So for the first year, I'll pick the gross profit there, which is 21,600. You divide by the sales of 2019. And then now you take that across. And then now what do you do? Like that. But now remember, they spoke over how many years? Check again. Gross profit margin forecast is the 3-year average from 2020 to 2022. So there is no worry. So 2020 to 2022. So do we have 2020, 2022? Yes. Thank you so much. Now they want us to average that. So please go ahead and average. So I hope everybody is able to use the average function. I hope everybody is able to use the average function. I hope everybody is able to use the average function. I hope everybody is able to. Yes, Muchuku, we discussed this concept quite a lot in the marking. that at times you may not even be able to get that category totally. But that does not really mean that you will get 0 in the entire exam. You can even go ahead and to use your own growth rate. Say let G be equal 10%. Because here really it's about getting the wheel rolling. Thank you for asking that question. So are you able to see how CPO Omondi has gotten that average? You guys, it's like you're switched off, most of you. How do you switch off? And I'm there here who is approaching 50 is, quite active, and you guys are young. You should say either very fast yes or no. You can see like now my namesake Joshua, they are coming to ask questions very late. My namesake Joshua, you should be able to ask a question immediately. You don't understand. Great, great. So average. Okay. Yeah, I can see what Silvanus is telling us. That we simply take average and then we do the divisions, but I will not buy that average. I will not buy that Silvanus here today. Today, we don't want shortcuts. You don't want shortcuts. Or is there anybody who would want us to use shortcuts? Is there anybody who would want us to use shortcuts here? Is there anybody who would want us to use shortcuts? We use shortcuts. No. They want to save on time. No. This is how you guys will pass. Trust you me. Because you'll put that shortcut like now Silvanus doesn't want us to show these 3 figures. Silvanus doesn't want us to show these 3 figures. And yet I gave you guys the marking scheme. You saw they are marking one entry at a time. You saw they are marking one entry at a time. You may also lose some marks by those many shortcuts. Trust you me. Because now we are being guided by the marking scheme. They are marking 1, 1, 1, 1, 1, 1 like that. Yeah. To me, I would rather, after all, if I do it this way and you put your 101 shortcuts, we'll still finish this exam at the same time. Trust you me. I'm telling you, even last time, the guys who did the cash flow statement using a calculator and they posted figures and they passed. To me, it's not about those exact shortcuts. It's about correct numbers. Thank you. So please move to the next one. Somebody should be able to send you the marking scheme. It's already in the group. So the next one, and for me, I will have now to disappear. Just a moment. Adult is now confused. Is it possible we pick this question from here tomorrow? But again, unfortunately, you guys are not available during the day. It's like we have to only work at night, and I'm realizing at night, even Mwalimu himself is worked up. How comes you can't ask for permission from your workplace? We can't finish because I have to disappear. At 10, going all the way along Thika Road, I have to disappear. And I'm so sure most of you, because you can see we were 147, now we are 141. Also the diminishing. Let's finish tomorrow. Leave is from next week, Monday. We can have the class, then we record. Okay. Or 8 p.m. is the best. No, it's not the best. You can't compare. You can't compare. Because the mock paper was, yes, it was the pilot paper. Yes, it was the pilot paper. I know why Bora wants it at 8 p.m. and they're saying it's the relaxed time. Oh, it favors a good number. I don't know whether if we do just 8, we will be able to finish. I thought we would get more time. Mchana unaweza hata 3 hours. Mchana unaweza kufanya 3 hours mzuri sana, wanafunzi wakifanya pia inaweza kuwa rahisi, lakini sababu nyota ya muko, let's talk on WhatsApp and then we see. Kazini hakuna ruhusa. Nyinyi kwani mko na employer mgani? Kama mimi siendi kufanya exam na napewa leave, na siendi kufanya exam. exams normally take maximum, they take maximum 1 month, 3 weeks to 1 month. Thank you so much. So let's meet tomorrow. Let's meet tomorrow. Let's meet tomorrow at, let's discuss on WhatsApp. Thank you. Bye. And this one will be mounted on YouTube. We shall be able to send this video, we shall mount it on YouTube and send it to you immediately. So of course, as usual, ensure that you subscribe to our YouTube channel. Thanks and be blessed. Good night.